Happy New Year. This marks the beginning of a new year, and I wish all of these viewers a happy new year and a happy 2023. For those who have been following me, 2022 has been a great year as an investor. But overall, investing has been very difficult in 2022. A lot of people have lost some money, some have made subpar returns. In India, the index has moved up, stocks have lost money because one particular group has dominated the index. Worldwide, the index has corrected. Like I said yesterday, S&P is corrected 19%, Nasdaq more than 20%, and definitely in a grip of a bear market. Interest rates are already high, already 4.25% increase this year. We can expect a further rise in the coming years. In spite of all the naysayers saying that inflation will come down very quickly, I do not expect inflation to drop immediately. So there is at least 100 to 125 basis points increase in interest rates and a very long pause from Jerome Powell. One thing is certain, 2022 marked an important era in the world of economics. It meant that the easy money policy that has been going on for the last 15 years has gone and has vanished. Interest rates today are expected to go up. The 10-year treasury, which is the safest bond in the entire world, is at 3.9% at the peak. Long term interest rates are lower, indicating that there could be a recession and then inflation subsiding over a longer period. What is the cause of this crush? The cause of this crush is primarily a surge in inflation, primarily due to the pandemic and printing of money and distributing as it largesses among the people during the time that the pandemic was there. The people took the money and spent it like there is no tomorrow. And therefore, the prices of goods and services went through the roof. Initially, Jerome Powell, the head of the Federal Reserve, blamed this entire problem on supply chain shocks in China and the rest of Far East Asia. But subsequently, it has been proved that this is entrenched inflation and their wage expectations are higher. So the Fed moved and started late but moved quickly to raise interest rate by 4.25%. One expects, as per the Fed's minutes, interest rates to go up by another 1 to 1.25% and have a long pass. There is a possibility that the US market may be forced into recession. It is clear now that the English government is in recession, but it has also moved quickly to tighten its hand because inflation in UK was going out of control. The US Federal Reserve is not the only bank to increase interest rate. All banks in the world except the Japanese central bank have increased interest rates. As far as the Japanese central bank is concerned, even they are feeling the pressure of inflation finally. The bond rates in US, the bond rates in Japan were supposed to be maintained between zero point 0.5 and 0 by the monetary authorities. The monetary authorities are the last word for the bond market in Japan because they own more than 50% of all stocks outstanding in Japan. The rate for the bond market used to be minus 0.25 to 0. It has now been decided that the interest rates that the funds would be withdrawn and bond rate can go up as far as 0.25. This means that the yen has become more expensive than what it was at the beginning of this year. After the crash, one can expect that the yen will rally back to older levels. What is going to happen this year is $1 million question. There are two camps. One camp, led by Manoj Pradhan, which believes that interest rates will rise further. There is this demographic theory that the Americans are not producing enough children and therefore they do not have enough labor. And this is the reason why labor markets are tight, especially on the services side. The US has to have looser immigration policy, allowing more immigrants to come in so that the wages can cool. But the current political scenario in America is not in a position to allow increased labor migration, and therefore, the America will have to deal with higher inflations and higher interest rates. There is another school of thought by Oliver Blancard which believes that this COVID issue was a temporary phenomena and that the inflation would return back to its old trajectory. And when inflation returns back to its old trajectory, one can expect lower rates and higher asset prices. But one thing is certain, because interest rates have increased, asset prices have collapsed. All sorts of speculative assets, which were having a field run from 2008, have collapsed. Assets like Bitcoin, which we did not know existed in 2008, started off as a paper from an obscure Japanese engineer, went to heights such as 72,000 because money was made literally free and given to everybody. Now that interest rates have gone up and the Fed has started quantitative tightening, speculative asset bubble has burst, and prices of cryptos have almost come to very low levels, with most of the 15,000 crypto coins having no liquidity. Even the most liquid among them, the Bitcoin, has dropped more than 70% in value. Speculative bubbles of all kinds have vanished. Private capital is very hard to find as there is a liquidity crunch. All the unicorns which were running on private capital are finding it very difficult to maintain their workers and pay for expenses, because when the money was easy and plenty in supply, nobody talked about revenue, nobody talked about profits, nobody talked about break even. As money is tightened very sharply, every startup or unicorn is now forced to look at words called profits, revenue, and numbers. The several sham companies such as SBF's FTX have collapsed. Even Coindesk is under severe pressure. So all the excesses of the years between 2007 and 2022 have to correct before we can expect any meaningful recovery in the market. Elon Musk was finding it tough with Tesla already, because people are finding it difficult to finance a Tesla by paying upfront and waiting for delivery. His shenanigans in attempting to take over Twitter first and then trying to back out and then again getting into Twitter has given Elon Musk a bad name. His price of Tesla shares have crashed from a height of 470 to 112 with no signs of recovery. Whether he will be able to turn Twitter without losing focus in Tesla is something which we have to wait and see, because other car companies will also launch electric models at affordable prices. I do not think there is going to be a big rally in world asset prices next year, as the world will initially front load interest rates and give a large pause. Therefore, with the Fed and the other central banks being in a mood for correction, global growth is expected to fall. Even India's growth rate is set to fall compared to the previous years. All this means next year is going to be wait and watch for us. However, it is certain that some of my viewers will have to start investing in American markets. Thank you for watching. Be rich. I want to thank all of you for supporting our event in Oman with great enthusiasm. A lot of people turned up in Oman, and a place where I don't have much influence. I wish to thank all of you for your support. The next event is going to be in Qatar, Doha. The event is scheduled for the last week of January. Those who would like to meet me in person in Qatar, Doha, or come to our event in Doha can send their request to the mail ID given below or contact the WhatsApp number flashing on the screen. My team will respond to you. See you in Qatar in the last week of Jan. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.